Hello everybody and welcome back to the channel, and today's video that is going to focus on top 5 Geonomics stocks part 2. This is basically a follow-up to our previous video. There has been a lot of requests since then to do another one, so therefore we thought, okay, let's select 5 new companies. And this is also a good opportunity for us because we are today launching our new structure, which is a bit different. It is still detailed, but perhaps a little bit more light and fast-paced version. We think it will be quite interesting, a new way of showing the things. Obviously we would like to get your feedback, so please leave us a comment in the comment section what you think about the new structure. So today we have selected the following 5 companies: Crispr Therapeutics, we have Bio-Techne Corporation, we have Bluebird Bio Inc., we have Sangamo Therapeutics, and we have Neurocrine Biosciences. You can see here the market cap in billions and the current share price. If we take a look at the return over the last year, what we can see is that Bluebird has been struggling quite a bit, a loss in the share price of around 33%. A little bit better, Neurocrine has gained 18%, Sangamo has gained more than 90%, Bio-Techne Corporation 130%, and finally the best of the 5, it's Crispr with around 230, and probably also the most hyped one of these 5 stocks. But as we can see, Crispr has had a really rough start to the year. It was up with more than 400% at one point, but now it has since gone down to 230, and that is also reflected in the simple moving average trend for 20, 50 and 200 days that we can see here. Crispr is now in a downtrend from these two simple moving averages. Bio-Techne corporations, they are still in an uptrend. Bluebird has been in a downtrend, which is no surprise given what we have seen from the last year. Sangamo has also turned into a bit of a downtrend similar to Crispr, as we can also see here from the graph. And finally we have Neurocrine Biosciences, which has also been struggling a bit for the last 200 days. If we first take a look here at our new revenue and profitability overview, well, what is first important to state in regards to the genomics kind of companies and sector, that it's very research heavy. They're spending a lot of money on this, and that needs to be considered. We're going into more details in the research part later in the video, but for now, just keep in mind, don't get too scared already when you're looking at the net income of some of these companies. As we can see here, Crispr, they lost around 350 million. Tech here, Bio-Techne, it has gained 175 million, so quite okay. Blue minus $619 million. Sangamo 121 million, and finally Neurocrine has gained more than 400 million US dollars. So again, what we can obviously see is that tech and NBIX here are profitable, whereas the others are losing money. But keep in mind, again, there is the research part, and we're going to show that later in the video. So what we think was quite interesting in the new structure is that we have added these trend graphs, which basically shows here the revenue part. As we can see here with Crispr first, what is very important to note on this graph is that the light colored bar is the latest year, 2020, the full year that we have. And as we can see, Crispr, they have been quite fluctuating. They had a big one-time revenue stream, it seems, in 2019, and in 2020 they had less than $1 million in revenue. Then we have tech here, where we can see a quite nice stable growth in the revenue. It's year-on-year growth. That is something we like to see, and that gives an indication that the revenue could continue to go up in the future for tech. For Bluebird, it has been a little bit more of a fluctuating point. Increased quite significant in 2020, so that gives an indication that either there was a major breakthrough for them or it is a one-time income. And based on that the share price have declined over the last 1 year, our best guess is basically that it's been a one-time income stream, and therefore this is not something that is expected to continue in the future. Sangamo, quite nice growth overall over the last 5 years, but still the revenue is only 118 million, so it's not a huge revenue. And finally we have NBIX here, which for us is very interesting. Again, huge growth year over year, and they're now selling for more than $1 billion US dollars. So again, quite interesting graph. Similar trends can sometimes be spotted within the net income part, and obviously here Crispr has also been a bit volatile. Actually in 2019 they were profitable, but again that was probably due to the one-time income stream that they were having, and they have been losing obviously quite significant in 2012. Tech, on the other hand, has also been growing relatively steadily, but not as, the earnings have not increased as much as what the revenue have. So again, they definitely also have some cost that needs to be considered. We have Blue here, which is increasing their losses. And again, this could also be a reason for the decrease in the share price. Obviously, in 2020, they stopped the bleeding a little bit from 2019, but it's clear that they are losing a lot of money because perhaps they're investing into the business. And a similar situation with Sangamo. Losses are also increasing, unfortunately, but again, it could be due to the research expenses. And finally, NBIX actually turned from having a loss in 2017, and now they have been profitable for the last 3 years. So that's obviously extremely good to see. Again, we need to note one point here. When we see the $407 million US, we doubt that everything is attributed necessarily to the revenue part that has increased, and therefore this could be an indication that NBIX has also had a one-time income in 2020, and therefore this high net income part may not be sustainable going forward. If we take a look at the expected growth from a revenue angle, what we can see is that percentage-wise, Crispr is expected to increase their sales significantly, and this could be due to new product launches. We don't know exactly, but again, at least the revenue will increase significantly in the coming years, and this could also be one of the reasons why this stock has been hyped quite a lot. We have Tech, which is expected to have good growth. Blue, significant decrease, and again, that just adds to the tale that during 2020 there was probably a one-time expense, which is not expected to come in again from a revenue perspective. Sangamo and NBIX are also experiencing quite good growth, although it seems that it's slowing down a bit from NBIX from what we have seen in the past years. Next, we go into the return and shareholder yield part. And obviously, by no surprise, if we look at the return on assets, return on equity, return on invested capital, and the free cash flow yield, we would expect to see the best numbers from Tech and NBIX, as they are the ones that are profitable. Likewise, the ones who are losing quite a lot of money, which is Crispr and Blue, they're definitely the one who have the worst numbers overall, and Sangamo is somewhere in the middle between the two of them. But again, no big surprises considering the numbers that we just saw before. We can also quickly look at the shareholder yield, and obviously from a dividend angle we wouldn't expect any of these companies to pay a dividend, but we got a bit surprised. We saw that Tech here paid a 0.3% in dividend yield, so nothing special, but at least something. From a buyback yield perspective, Crispr has had the need to go out and raise more equity, and obviously they have probably taken advantage of the huge increase in the share price to raise more equity to fund their research and their growth, so quite natural, but you just need to be aware of this as an investor. And we're going to take a look shortly and see if we think that Crispr is going to need more money or equity in the future. In our new balance sheet overview, we can see here that it has been streamlined a little bit just to make it more focused on the most important aspects. What is important to take away here in this special analysis is that overall it's looking quite well for all the companies and all the parameters. What we can see here, and more interestingly, is the total cash and short-term investments that Crispr has on hand, 1.7 billion. They were losing around 350 billion, which means that they can continue this cash burn for at least 5 years without needing more equity. That is obviously good to note. Tech is profitable. They have $283 million on hand, so that's also quite good. Blue, it looks good, 1.1 billion. However, here we need to keep in mind that they were losing $600 million in the last year. So again, if they continue this cash burn, they do not have more money for more than 2 years to run, and then they need to go out and raise more equity. So again, just needs to keep that in mind with Blue, that it's not perfect from a cash and short-term investment perspective. The Sangamo here is 641 million in cash and short-term investments. That's quite good. They were only losing around 120. So again, no really concern. They have quite a long time to go at if they maintain the cash burn from the last 12 months. And finally, NBIX has more than 800 million, and they were obviously also profitable for the last 3 years. So it's looking fine. And again, we would say that across the board, it is looking quite fine. The only one where we have a little bit of a concern is Blue, and that's also when we look at the Altman set score, which is the credit strength test that assesses the likelihood of bankruptcy. In general, we want this to be above 1.8, and here they only score 0.5. So again, keep that in mind if you are an investor. However, As we said earlier several times in the video, it is very important to look at the research part and how much these companies are spending on research, because obviously research should lead to some kind of products or services in the future which should generate revenue. So again, if they're investing heavily today, it may mean that they reap the fruits in the future. So it becomes quite evident when we look at Crisp. They have ramped up significantly the R&D spending, and they are $267 million a year. They were losing around 350 as we saw before, so a huge part of their cost is obviously in the R&D space. Similar on Blue, they were spending $588 million. So again, had they not spent that kind of money in R&D, which obviously we would expect them to spend some sort of money, but hadn't they spent as much, their numbers would have looked a lot better. But what is though concerning is that the R&D spending for the company has been quite high for at least the last 4 years, and it does not seem like the revenue has really taken off completely. So again, they're still a little bit worrisome around them, but it could be that they have some kind of major breakthrough coming through in the next 12 to 24 months that we are not aware about. But again, it looks still a little bit disconcerting overall, but the R&D is a good explanation of why they're losing a lot of money. Similar with Sangamo here, $181 million. And finally, NBIX is actually spending $275. They have also been increasing that R&D from a 5-year angle. So again, that's quite good for us to see. You know, they are becoming profitable, but they are still investing more of the money into future growth. That's what we like to see, because it means that they are, you know, trying to expand their business with new products and services, etc. So again, NBIX for us looks quite interesting as of now. So if we take a look at the valuation part and we compare the current PE ratio with the forward PE ratio, we can see that both Crisp, Blue and Sangamo all are expected to post losses in the coming year. Tech is declining from 87.2 to 57.5. So this is an indication of that increase in earnings is expected. On the other hand, with NBIX, they're going from 22.4 to 31.1. So that's actually an indication that their earnings are going to decrease over the coming period, and that's obviously a bit negative. We can also take a look at the price to sales ratio, and obviously here we can see that Crisp is very expensive from this metric, but again, there's an expectation that the revenue is going to increase significantly, which will obviously lower the price to sales ratio. But when you benchmark with some of the others, Tech, Blue, Sangamo and NBIX, obviously Crisp looks a little bit expensive from this angle, but you need to keep in mind that this is fundamental numbers and there are other things to consider for stocks than only the fundamentals. Then we can look at some fair value estimations, and basically our own estimated intrinsic value, we see an upside and a downside. On Crisp, we found it quite difficult to put a realistic evaluation on them, so we therefore says non-applicable. However, with all the other companies, we actually have a quite good feeling about them. The only one that we would put a small disclaimer is to regards to Blue. We are still a little bit uncertain with their numbers, but again, we see an upside on them on 17%. Small upside on Tech on 5%, Sangamo 20%. They seem to be doing quite a lot of good stuff. And finally, NBIX, despite the increase in the forward PE ratio, we still see an upside on them on 14%. And what is quite interesting is that NBIX has not had the same run as some of these other stocks have had over the past 12 months. So we think that that has a bit more room to increase further up. If you look at the book value indicator, just the book value per share cost versus the current share price, all of them are overvalued. We wouldn't expect anything different from these type of companies. And if we look at the relative strength index for the last 14 days, it is very interesting to see that a lot of them is moving towards the $30 mark, which means that they go into oversold territory. And this is a technical indicator that they may go in an uptrend. And here NBIX, as we can see, has touched this. They are around 30 now. So again, from a short-term angle, this could be an indicator that NBIX is going in an uptrend, and which obviously means there will come an increase in share price. So if you're looking for a quick trade, maybe that would be interesting to take a deeper look at NBIX. Finally, we can look at the analyst recommendations, and again, we don't take them for granted. They have their own agenda sometimes, but it's always good to see what are they seeing compared to us. And obviously, they, as we can see here, they're quite bullish on most of the stock. They're going all the way from 21% upside on Crisp up to 108% on Blue. So they're quite bullish on Blue, which is a little bit surprising to us because although they're doing a lot of research, they haven't really converted that into revenue as of yet. So again, we are a little bit in doubt whether they will be able to live up to this, and therefore the price target seems a bit aggressive in our opinion. But nonetheless, quite bullish overall, also on Sangamo, 70% upside, 39% upside on NBIX, and then actually a downside on tech on 4%, which we are a little bit surprised about, but again, quite close to fair value. So if we take a look at the summary ranking, what we can see is that from a trend perspective, all the stocks, it's only tech that is currently in an uptrend. All the others are in a downtrend from a 20 and 50 day simple moving average. 200 days is sometimes what people want to look for before they see a final trend, but we just want to not be too bullish on some of them, although we see an upside, just to let you know that currently it seems to be in a downtrend for these stocks. If we take a look at the net income, there were two of the companies, Tech and NBIX, that was positive, and obviously that is reflected in net income margin. From a revenue trend and earnings trend, Crisp has been a bit stagnant, but it is expected to increase in the future, while as all the other ones have had growth. On the earnings trend, both Tech and NBIX again has been growing, while as Crisp, Blue and Sangamo has been losing more money, which is partly due to their R&D efforts that they're doing. From a return on equity and return on invested capital, obviously NBIX and Tech are the best. Similar for the free cash flow yield. From a shareholder yield perspective, it was only Tech that was sending out a dividend to their shareholders, so that's why they get a 1, and Crisp were obviously raising equity, that's why they get a 5. Perhaps this is a bit misleading, but that was just how we wanted to illustrate it. But again, if you're a dividend-oriented investor, you would obviously not look for these kind of stocks because they are focusing on growth in the future. From the balance sheet perspective, it was looking fine across the board, with the exception of Blue. We know that they get the 222 here, but we still have a little bit concerns with their cash burn versus how much cash they have on hand. So we think that that's a little bit misleading and needs to be considered at least as an investment angle. And finally, from an overall value assessment, actually all of them has the indication that they are undervalued in our opinion, and there's an upside potential in them, some more than others, and for different reasons perhaps. Some of the companies like Crisp seems to be at some point in the next 12 to 24 months, exploding quite a bit from a revenue angle, whereas Tech and NBIX are a little bit more stable type of companies, it seems like. So again, depending on which kind of investor you are, you may be having a preference for one over the other. So what is our verdict on these stocks? Well, overall, we see many good buying opportunities. If we look at Crisp, they are the more risky play in our opinion, but they still have a strong balance sheet and they have a potential disruptive cancer treatment that is in trials at the moment. And again, that's where a lot of the expectations are stemming from. So quite an interesting company. You have Tech. Overall, they are also recommended. They have solid numbers. They're a profitable company with growing revenue. We don't see a huge upside, but there is an upside and it could be higher in the long term. You have Blue. We are recommending them overall, but we want to make really sure that you understand that they are investing heavily in R&D. Revenue is expected to decline back again in the coming year, and they may need additional cash in the future. However, it's still quite interesting. It wouldn't be our first pick, but we will still recommend it anyway. Then we have Sangamo. They have growing revenue. They are not profitable, but they are quite high again on the R&D expenditure compared to what they're losing. And the balance sheet appears good. So again, we wouldn't have any issues recommending them. And finally, we have NBIX, revenue and net income growth. They are still investing in R&D, and they appear to be the safer choice overall of the 5 companies. And we really like them as well, despite their increase in the forward PE ratio. So again, this is quite an unusual situation where we are actually recommending all 5 companies in this new format. That's not usual for us to see that, but there is quite a lot of companies that we find interesting. We would probably select Crisp from a more risky perspective if we want to have high growth, while as NBIX and Tech is a bit more the safer choice for us. So depending which kind of investor you are, you can consider that when deciding if you want to go with either of these stocks. This was all we had for today. Please keep in mind that we are not professional financial advisors, and this is only done for entertainment purposes. Please leave a comment in the comment section. Do you like our new format? We hope that you do, but please let us know if you have any suggestions for improvement. Please give us a like, it really helps with the algorithm, and please subscribe for future content. We send out quite regular videos on various topics, among others renewables, but also genomics, genomics or whatever you guys want to see. And again, we are always open for suggestion. Besides that, there's not much more to say than stay safe, have a nice day, hasta la vista, baby.